Hello folks, this is Raj Sastri from Raj Option Trading. Today I want to talk about most active, very small cap stocks. These are micro and nano cap, meaning market cap is less than 300 million. And I'm looking at these stocks which are very active in last 3 months. Average volume in last 3 months is very high. So with that, historically, many of these asset managers, meaning ETF, mutual fund, index fund, all these folks have not paid too much attention to microcap. But of late, they've been paying attention to microcap, especially because these microcap stocks are doing very well. So with that, today is April 11th, 2021. I think in your portfolio, it's okay to have some allocation towards the micro cap. You can do the mega cap, large cap, medium cap, mid cap, small cap, even micro and nano cap. It's okay to have some allocation, so that way you can watch some of these companies which are really blossoming pretty nicely under the radar. And many of these companies will become really nice and big companies as we go forward. So it's really interesting to spot some of these companies which are, in the early innings, and potentially they can become Amazon and Tesla, or even Moderna of the future. So with that, let's jump in and look at some of these companies and see if it makes sense to invest, slowly in some of these companies. So these are a few companies. We'll start with the first one here. It's on Encore Therapeutics. The reason I chose is really it's got a very nice quarter over quarter sales growth, 90%, and it also has a right now sales is zero. They're not doing too much sales. 82 cents per share, and market cap is 194 million. And it's ownership from institutions is 15%. That's pretty high for a small stock, 82-cent stock. And gross margin at this point is zero. As you can see, price to sales is 100 plus, meaning there is no sales right now. Sales is zero. It's still in the early stages. And they've done nicely. On a 6 month, it's 185%. On a 1 year, it's 161%. And I think last 1 month they've not done much. It's a little bit beaten down. That could be a good opportunity to invest some. It's a very low dollar. Invest some and keep it from take it from there. Next is Acosti Pharma, ACST, Canada-based company, 54-cent stock, 136 million market cap, no sales right now, and institutional ownership is around 2%, as you can see here. And they've done nicely, 38% 1 year, 163% in 6 months, and they've fallen off a little bit off late. Last 3 months stock has fallen down. And then we have BioLace, and this company again negative sales growth right now, but nice gross margin, 27%, has done nicely for 1 year and 6 months and fallen off. I mean, this company has done nicely all along. Even 1 week it has done 21%. So this company, whenever it's in a little bit down, it's good to buy. Just $1 stock here. Express is again an apparel company. I think it's a opening play at this point. As more and more shops and economies open up, this stock can get a nice boost. So right now, negative sales, as you can see here. There is a high float. This might be a short squeeze candidate, and they've done 46% in 1 year, and 6 months they've done so nicely, 403%. So we can look at this also as a reopening play. Then we've got a couple companies here. Cinedigm, same story. It's entertainment. It's a reopening play. Second Sight. This is again they provide some help around the eyesight for the folks who cannot see. Very nice growth here. 1 year, 735%, extra astronomical. And I like Jaguar Health. JAGX. It's got a nice 1 year sales growth, and a quarter-over-quarter sales growth. And it's got a good sales also. As you can see, your sales is $9 million. It's good to see a company, like $1.85 company, which is giving a good sales growth and a quarter-over-quarter sales growth, and also nice gross margin. So it's a good company. Also did very nicely, 291% over the 1 year. But last week, I think they fell off a little bit. Could be good time to buy, especially given this company has got a positive sales growth and a nice gross margin. Then we got AEZS, um, Terna. Here in this company, it's a $1.10 stock. Did very nicely in 1 year sales growth and quarter-over-quarter sales growth, and gross margin is also nice, 36% here. I think this had done 59% over last 1 year. It's a good company because it's got nice growth, and also got $4 million revenue at this point. Then I got few companies here. I will go very quickly here. You can look through these, and let's go to next slide. And we got a couple more here. Next ID, these guys are into IoT type play. Right now, it's a negative, sales growth, as you can see here. Nice gross margin, and they've done very nicely for the year, 238%. Nice, performance. And off late, for past 3 months, stock has been selling off. Could be good time to buy some and keep it for the long haul. Then we got a couple more companies here. Citrus Pharma. Again, no sales at this point, but institutions are buying into this stock, 7% here, and also negative, 169% 1 year performance. Nice. And they're not doing well since last 1 month or so. Maybe good time to buy some. And then we got Visilink here. It's also right now they are a little bit negative, not too much, a little bit negative on the sales growth, but nice gross margin and very nice 1 year performance, as you can see here. And T2 Bio, same story. I mean, this one is even better. They got positive revenue growth, as you can see here. Nice sales, $18 million in sales. And gross margin is negative. It's understandable for these early stage biotech companies. Nice 1 year performance, as you can see here. Then I got Advoxis ADXS. It's a $67 stock. They've got $2 million in sales and very nice sales growth for 1 year as well as quarter-over-quarter. And this company, I think last 1 year they've done negative, as you can see here, and they've not done well. I think last 1 month they've not done well. But I think something to look at. Maybe this will bounce off of these low levels, especially given they got a positive revenue growth. Next is ISR, Isore, $1 stock and positive sales growth 1 year as well as quarter-over-quarter. That's good to see. Nice gross margin. I love these nice gross margins, 52%, and done very nicely for the year. Last 2 weeks or 1 month stock has been selling off a little bit. Could be good time to buy. It's a very cheap stock, $1.07. Then we got XP. I think it's a $1.18 stock. I love these revenue growth, as you can see here. Nice revenue growth for this one as well as the next one. Alt Global, nice revenue growth, nice gross margin. And first one, I think INPX is done 8% over 1 year, but Alt, it has done nicely, 185%. Then we got Super League, this into E-League, esports and sports area. Done nicely, as you can see, a very good positive revenue growth. I love to see that. Good gross margin and has done nicely, 100% over last 1 year. Then we got last three here, 9meters, Westwater, Energios, and I think these guys don't have any sales at this point. and right now it's all zero as you can see here. But last one, I think they got some sales, even though it's rounded off to zero. That's why there's a positive sales growth, there's a positive gross margin, and all of these have done nicely in last 1 year. So the ones which are highlighted are my favorite at this point. Some of the other companies also may be good, but I like to look at nice sales growth, gross margin, and institutional backing, and also 1 year performance, and make my judgment on based on these statistics. So with that, let's look at few charts here and see if it makes sense. ONTX, biotech, like we talked about, has done very nicely for 1 year. Stock has fallen off late, 82-cent stock. I think it's good to buy. Low RSI. I think it's good to buy. Next is Cinedigm Entertainment Company. They're into movie theaters. Could be reopening play. Stock has gone up, come down, gone up, come down. We could see another bounce. Next is Jaguar. Jaguar, has done nicely. Positive revenue growth as we talked about. Stock has sold off. Could be good time to buy some and keep it for long haul. Then we got AEZS. Stock has done nicely. This could be a short squeeze, as you can see here. Came down. Now it's kind of trending sideways. Could be good to buy some and keep it for long haul. Next is Admp. Same story here. Stock went up to 240 or so, then sold off. Could be good to buy some and keep it for long haul. Then we got Avgr, medical device company. Same story. Stock is sideways, low price, $1.50. Then we got software app, Funware. This also, I think, stock is kind of bouncing all over. Now it's around 189 or so. Could be good time to buy some. Then you got Check. It's again a Israel-based company. Stock is around very $1.73, has fallen off the highs. Could be good time to buy. And then you got biotech company NOEVN. Same story. Stock has kind of sold off at this point. Good to buy some. Then we got a couple of these companies, NXTD, Security and Protection. They're into IoT. Stock had done nicely over the last 1 year. Could be good time to pick some up. Then we got CXTR Biotech. I think, by looking at this chart, you can make out stocks have done nicely, have fallen off the grays. Could be good time to pick it up. SLGG is one of my favorites, done nicely. And we'll go to the last slide here, metals and mining, WWR, and WATT, scientific and tech equipment. So with that, I feel, the companies, we should also look at these very early stage, very small cap stocks, just to, keep the focus on these small companies, especially ones with nice revenue growth like Jaguar as an example, and some of the companies like AEZS. The moment you see nice gross margin and nice revenue growth, and nice performance, those are the recipe for success. And also you can look at the institution ownership. These are small companies, you will not see high institution ownership, but at least if you see a double digit or even high single digit, that shows even big institutions are interested in these stocks, and could be good time to buy some in your diversified portfolio. So with that, thank you very much. Happy investing.